Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, November 25th, 2025. Still a little bit under the weather, so I'm going to kind of keep this quick. But we saw the indexes really put it in a massive 2 day short squeeze. And this was, we see this happen a lot where they break support, they break this support, everybody gets short. The bears get aggressive. People panic sell, and then from there they shoot it straight up. We've seen this happen a number of times, and they keep going up. And this is the same thing that has taken place. So this was the original resistance line. They broke through it, and then they made it up to the 62% retracement. So this is the second retracement line right here, and you can see we have the 78% retracement. That's right at the 68.36. So that's still about 60 points higher than with almost 70 points higher than where we are. There's a chance that they're going to try to get it up here, and the reason why I'm saying it. So this is this. What I'm gonna do is I'm just gonna leave that so you know what it is. Now, this what this 78% is from this low. Let me do this. Okay, so it's from this high to this low. So this is the first move we had down. We had the bounce up. We closed the gap, made it up to the 78% retracement, and then collapsed back down. I'm not saying that's going to happen, but you can see right here we have an open gap right here, right next to the 78% retracement, and if it's mimicking this, it's not being an exact fractal pattern, but it's what has taken place before, where we get this big drop, they rally straight up, close the gap, get to the 78% retracement, and then come back down. So if that's going to be the case, then we're looking at a move coming somewhere up into the 68.40. Now, the reason why I'm showing these fractals into the downside is because we still have about 6 trading days left of the bearish cycle, and I still think it's going to be volatile. I am not looking to say short this market. I'm saying be careful with getting long. Where you are and what you're doing, because we've seen it when everybody puts their guard down and they think that, okay, the worst is over, and then they drop it right back down again. So again, I'm leaning, I'm neutral, but I'm very cautious right now. And once we pass next week and we get through this bearish cycle, then I'm going to probably start getting pretty aggressive on the long side, and that's I think that we're going to have a Santa rally, and I think we could come up and possibly even surpass these highs right here. But the problem is that there's a chance that we could still come back down and take out these lows. And that's why, like I said, I'm being a little bit cautious until this bearish cycle passes. The other ones that they came and gone and nothing really happened at all. And this was one of the bearish cycles that we had, and we went down and we were at new highs really fast. So the fact that this is now start going on from October 28th, which is almost a month, is telling me that this is a little bit different than the other ones, and I just want to keep, be prepared. And the thing is, we can scream straight up, and that's fine. We'll simply just switch to buying dips on the daily basis, and we already, we've been buying the quantum stocks. Obviously, a little bit early. We sold them a little bit early on the upside, and once I think, everything clears and the dust clears from this bearish cycle, I think you're going to see them start leading the way. I know a lot of people are starting to question, their valuation, but in my eyes, the stocks that we're in with the hardware end of it, I think they're here to stay. I don't think they're going anywhere, and I think any kind of dips like this are going to be buying opportunities. So right now on the S&P, concentrating on that, we are at the 62% retracement. If they gap it up, then really what we got to keep an eye on. Let's go to a 15-minute chart because that may give us a better idea. Well, we have the 67.95. Now that's just the 78% retracement from this high to this low. So the one that I was showing you here was from this high to this low. So we're still at this thing where we can get up to the 78% retracement. The only difference is this gap wouldn't be closed. That's why I kind of like looking at this at the 68.36 as a possible top. But the first resistance is going to be the 67.95. If they get above it, you can see there's some resistance right here, and that's right at the 68.12. But we're pretty close to getting up to closing the gap. So I would think that they're going to do that. Now, I mentioned in the report, or yeah, the report, not the morning notes. Maybe the morning notes. I don't really remember. But tomorrow and Friday are in the cycle realm of things. They're standing out as very volatile days. Now, does it mean the market has to go down? No. It's just saying just to be very prepared for reversals or just massive continuations. It's going to be volatile. So I think we're going to see some very choppy markets, and that's really what I'm anticipating. And again, if I'm wrong, so be it. We'll probably do what we did today on the daily stuff, because I was definitely leaning more on the side that we were going to get at least a little 1% retracement today to at least head fake some of the bulls, but we didn't get that, and I was leaning doing the same thing where I was closing out the calls on the IWM side and building the position on the put side, and I don't think we had more than a 40 cent drop. So we took a little bit of a hit. I think it was $100 or 200. It wasn't really much, but the quantum stocks were down, and that's really what hit the portfolio a little bit. Nothing crazy. It was let me see something. Hang on one second. Yeah, so we took a $1,300 hit, and again, a lot of it was the quantum stocks. That was really the ones that gave us the little bit of a headache with everything. So it happens, and you know what? Again, that's why I'm just being patient with these, because I'm confident that they're going to be leaders in the next couple of years, and we're going to be looking at some of these the stocks that we have that are going to act like Nvidia and stuff, and that's really what I'm looking at. So it's a long term hold on that. And so we're gonna have our up days and down days. Yesterday I didn't even trade, and we had an awesome up day because the quantum stocks went up. So I'm gonna continue to hold those. But going back to the S&P, so if they continue higher tomorrow, then and they can stay above this and it's accepted, then we just assume that they're coming up to the 67.95. Above that, then we're going to look at the 67, 68.25, but might as well just close the gap and get up to the previous 78% retracement, which is at the 68.40. So that's what I'll be looking at on the upside. Now, on the downside, it's obviously this is going to be the first support level. It's going to be, well, you can go here and say it's at 67.57, only about 8 points high, lower than where we are. But I think this is really the more important support, and that's at the 67.37. If they get to below it, we have moving average as well as some price support right at the 67.15. And then, really, the more important support is going to be right here, down at right around that 6,700 level, or 66.91. Because if we take that out, there's a bunch of support levels. Don't get me wrong. So the bears have the work cut out for them. They had the bulls, in the crosshairs here on the way down, but this is a very constructive move where we're going up, pulling back, going up, pulling back, and we're not making any lower lows. So right now the bulls are in the short-term control, where we're seeing, instead of a series of lower lows and lower highs, we're now seeing a bunch of higher highs and higher lows. And until that changes, the bulls are in control of the short term. Now, to get out of the woods, they're going to have to get above this level, because this is the previous high. So if they come up and fail, then we still have a series of longer term lower lows and lower highs, and that's where, if we stop without getting above here, then the intermediate term tape still is in the bear's hand. And again, like I've been saying, we still have about 6 trading days left before we get into the out of this bearish cycle. And that's why I'm being very, very kind of cautious right here and saying, hey, if they're going to continue up, I'm fine with that. If they head down, I'm gonna, I'll accept that as well and just trade it as is. So again, just to wrap up with the S&P, 67.37 first support level, 67.12, and then really the important one's going to be the 66.95 area. If they lose that, then we're coming down to the 66.55 or 52. And this is where the Bulls start getting into trouble because they only have one more line of support. So let's take a look at IWM. I have been saying this. I that I thought. Oh, hang on one second. That if the Bulls are going to make a move, that IWM is going to outperform, and you can see it was up over 2% today. But once we got up into this resistance, right up in here, once we got up to the 243 closest gap, this is where I closed because we were long the 242s and short 242s. So when it got here, I was anticipating because we had some bearish divergences in place that we were going to get some type of a pullback. So what I did is I said, I'm closing the 42s here and going with 43s, putting call position, and we just kept going up, and that was it. So it was one of the things. If I just held on to all the positions, it would have been fine. We would have made some decent money. But when you have sell signals in place and you're approaching, this was the gap right here. Resistance. I was thinking that we were going to get a pullback somewhere down into into this, the support levels somewhere into the 240, 265, but unfortunately that did not play out on that. And again, it was just more of a wasted day on IWM because this was a complete short squeeze. And you can see here we've gone from the 220 228, or say 229, all the way up to 245, and that's only in 2 trading days. So that's a massive move right there. And it's got to be, actually it's from Friday to today. So but it's just it's a massive move that happened, and it was a big short squeeze. But the problem with the short squeeze is that once they're out, then the Bulls run out of buyers. But again, we're moving out of this bearish cycle. So even if they run out of bears, it's probably we're going to just see new money coming in and pushing it up. So again, I'm not bearish on this market right now. I'm more cautious on everything, and that's really about it. So with that, this is probably going to be the last video until Monday. I'll try to get one out tomorrow. I know I have a pretty busy day after around 2 o'clock, but if I don't have a great Thanksgiving, I'll be having the morning notes and everything out tomorrow. But Friday again, as I mentioned in the morning notes, I'm going to be out from about 8 o'clock in the morning for the entire day. So if I do not get anything out tomorrow, have a great Thanksgiving with your family and friends. And with that, I will talk to you guys in the morning.